The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the March 31st, the magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Yeah, let's make sure we have an extraordinary one. Now, the easiest way to do that, well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to check on the circumstances of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it off to steve@tfnn.com. Inside that subject heading, please put radio show question. Now, of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on magical, magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we begin our day with a mixed bag out there. You've got the Dow up 55 points, S&P's up 35, NASDAQ down 285, Russell's off 24, transport's up 17, semiconductors down 96 points out there, gold's up $40, silver's off 18 cents, light sweet crude up $1.75. Natural gas is up in nickel out there. We got movers and we've got shakers. If I look for any real signals here of consequence, not really a lot popping up. I do happen to have the chart for the XLF that's on our screen. We can see the XLF on its daily time frame had formed a TD9 count top. Went ahead and confirmed that pattern on March the 26th. Now prices trading below its oscillator and change line, but above the top of its bear structure daily profile. The XLF, if it were to continue to pull back, if it's only a counter trend move to the downside, it would find support between 48.19 and 48.51. On a monthly time frame, price is going to hold that oscillator and change line. We do have bar number 8 that is, no, it's not going to complete. We do not have any kind of a topping pattern on a monthly basis that is going to form. Bar number 8, all those counts are going to go away because we're going to close below the close of bar number 4. So what we can state about the monthly time frame for the XLF is it remains bullish as can be. On the weekly time frame, just really following along with regard to the daily, the weekly has a Rhodes Momentum Indicator top. Now it rallied up into the level where a counter trend rally would come to an end, and that's at 50.69. So we've got a unique system. We've got a different set of patterns on the daily than we do on the weekly time frame chart out there. So I would have to say that right now, monthly bullish, daily and weekly, we're going to have to go with neutral at this stage of the game. That's what's going on with the XL. Let's check out a few more sectors inside the S&P 500. Let's take a look at the technology sector, the XLK. Let's go see what this is doing. This should be testing its lows. Well, it's trading below its lows. The lows I was referring to were the March 11th low out there. Now that had volume on that day. This is the XLK that we're talking about 7.4 million shares. We've been trading for less than 2 hours of trading so far, and we have done about 2 million shares. So you've got a decent volume. Now, what you can see is price gap down today. Friday, price triggered a Rhodes Momentum Indicator signal that is still present. What that means is that price is moving lower. One of the things that it means is price is moving lower with less relative energy out there, and therefore a bullish reversal candle would kind of create that trampoline effect Well, the rally, of course, there would be resistance levels that it has to deal with. On a weekly time frame, price is trading into the buy zone of its weekly profile. Now, it's rather large. What I mean by that, it runs between 195 and 209. Turns out that at 203, 203.01 to be exact, is the TD9 count breakout level. That's what price is testing right now. We're slightly below that at 202.84 out there. The XLK on a monthly basis is going to close below profile support at 211.71. So if the daily and the weekly don't start forming a bottom, and the weekly has bar number 7 of a TD9 count, so no signal there, we're likely to see lower price. Lower price longer term could be 164.30, but I say could be. What do you mean could be, Stevie? Let's open up the monthly chart for the XLK. What is it that we see out here? Come on, what is it that we see? Bar number 4 of a continuous move to the downside. Look at the very bottom panel of the screen out there. We have not seen 4 consecutive months to the downside in the XLK. Well, I'd have to go back further. I'd have to go back before 2000. And I take that back. We did have one that formed right here. That was on the trading. That was in December of 2018 out there, and December. Just give me, it's a monthly chart. Yeah, December 2018 out there. Now, I will share with you that on that, that didn't form any kind of a bottom back in December of 2018. In fact, price had closed below the bottom of its profile. So what this is signaling to you and I out here is that the XLK, even though we don't have a monthly bottom pattern, in fact, the monthly suggests lower price out there. I say caution on that. Caution on that because of the 4-month cycle to the downside out there. And that's actually suggesting to you and I that we should be looking for a bottom inside of the XLK. The daily bottom would be a Rhodes, would be a bullish reversal candle. Now, the problem is right now it shows up as a hammer candle at 11.12. The problem is it also shows up as a gap to the downside. So I don't trust those hammer candles that also are gaps to the upside in or to the downside out there. So that's what's going on with the XLK. This is kind of interesting out here because it's the NASDAQ and it's the semis that have gotten crushed out here. If we take a look at this chart, this is going to be the chart for the, that wasn't the semis, that was the XAU. Let me put the semis up here. If you give me a moment, what I'm going to share with you is really the weekly time frame chart. The weekly, geez, Stevie. Sorry about that, folks. You got to put in the correct symbol on at least on my software. If you put in an incorrect symbol, even though your mind says, it knew what it was looking for, the system doesn't respond like that. It's bad info in is, okay, that's the deal. Now, what we're taking a look at here in the stocks, we're really waiting for the chart to populate. And that chart that's going to populate that we're looking at is the monthly time frame. The weekly time frame. But what I want you to notice is that on a weekly basis, the semis are going to go ahead and complete a TD9 count bottom pattern this week. Now, that doesn't mean that it's a bottom out here. There is an A to B equals CD pattern to the downside on the daily time frame. No need for me to really draw that in out there. A bullish reversal candle would confirm that pattern. That suggests that sometime this week or by the end of this week or the beginning of next week, we're likely to see the stocks rally. Now, in the case of the semis out here, they have been trading lower for this will be the 7th. No, well, I can't say this. Well, yes, this will be the 7th consecutive 7 consecutive weeks to the downside so far. I can't say this would be the 8th week to the downside. So that's pretty significant out there. But you've got a TD9 count weekly bottom that's going to form inside the semiconductor index out there. Now, of course, that says that the low, whatever the low of this week is going to be pretty important because if we close below that, we're headed lower. Otherwise, we'd expect or anticipate a nice rally inside the stocks up towards the 47, 42 level. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Before we get to some of the requests out there, let's take a quick peek in on the intraday charts here. We've got the ES mini charts up on our screen. If you take a look at the very bottom panel, 10, 15, 30, and 60-minute time frame, what you're going to see there is each of those have Rhodes Momentum Indicator bottom patterns. Now, what price is dealing with here is resistance, and that resistance really coming from the 10-minute time frame chart, and that's at 55.88 a quarter level. That is just TD9 count breakdown area. If you see a 10-minute close, a 10-minute bar close about 55.8825, that's going to signal that we're headed up towards the 56.3150 level. On a 30-minute basis, that is its TD9 count breakdown level. Now, before we get to 56.31, we're going to have resistance up at the 56.05 area. That's coming from the 120-minute chart out there. That is the bottom of its profile, which formed below price out there. Now, it's an equally balanced profile. In other words, the center is really at the center at 56.22, where the top is at 56.38 out there. So that's going to be a little bit of a battle up there. Can't say that that's where the rally would end. The 4-hour time frame chart is suggested to move up towards 56.29, and the 5-hour chart, which has a nice TD9 count bottom, is suggesting 56.47. But the first level to be watching is 55.8825. You close above that on a 10-minute bar, that means we've got about another, 17 seconds or so for this 10-minute session, the 11:20 session, to close about 55.8825. We're at 55.8750. So if we close above that, we're likely to head lower out there. Now, that's the ES mini. Let's take a look at the NQs charts out here. Whoops, let's put in the correct month out there. That would be more helpful for us to do an actual review of the active contract. Whoops. Sorry, Stevie, having a slight problem. Thing that can't be unresolved. And momentarily we'll get the NQ charts. Now, the NQ chart, let's just wait for them to populate. Again, if you look at the very bottom row, you're going to see the 10, 15, 30, and the 60-minute time frame charts. And each of those have formed Rhodes momentum indicator bottom patterns as well. So where's their level of resistance? It turns out that on the NQ, the real key level of resistance to watch and observe is the 2-hour oscillator and change line. Yeah, that is really what has capped every single rally that has formed ever since back at about 2,200 hours on March the 25th. So where's price rallied up into at this stage of the game? Right into that level. What is that level as we speak? It's at 19,185-ish out there. Let's call it 119,187. If we close above 19,187, that's going to suggest that we rally up towards the area where a counter trend rally would end. In the case of the 2-hour time frame chart, that's anywhere between 19,371.25 and 19,413 out there. But the first thing to watch with regard to, so the ES, is already telling us it wants to rally. It needs the NQ to participate, and really, if their participation in the NQ is going to come because prices trade above that red oscillator unchanged line. Cool tool. I teach you about it. You should become a subscriber. It's simply just to learn that tool. If I look at the 4-hour and 5-hour time frame charts out here, what we don't have are any kind of bottoming patterns out there. None. No TD9 counts, no anything that we really could hang our hat on at this stage of the game. So it's really going to be about those bottom level charts, 10, 15, 30, 60, as well as that 2-hour time frame chart. And that's what you'll be watching for the NQ. Why don't we take a bit of time and go answer some of the questions that have come in. The first one coming in early this morning, maybe late last night. It was from Pat. And Pat wanted to know, I think it was yesterday actually, when the markets are closed, which they were yesterday, and the perigee or the apogee pivot point or lunar phase comes in, what do you do for price? What I do for price is I mark both the close of Friday, in this case here, we're talking about a weekend, or the open of Sunday night. And those are those two blue horizontal lines. Don't pay attention to them going to the left-hand side, the way that the Ninja Trader system allows me to easily draw just a straight line is to just use one tool, and it goes all the way from left to right. Now, what we can see here in the NQ, it is approaching another level of possible resistance. So if we take a look at the open last night, the open was at 55.90. It's ES Mini that we're taking a look at right now. I might have said the NQ. So that's another area. If we take a look at the close on Friday, the close on Friday for the ES was at 56.0250. So since we're already above Sunday's open, I'd be watching that 56.0250 level. What happens if price closes above that? Well, then short term, the signal would be you should be long, not short out there. And that would also suggest to Stevie, because there is a TD9 count bottom pattern out here for the 30-minute time frame, that would become the next price target level, 56.31. So that's for the ES Mini. If we take a look at that, just marked or identified the pivot point. If we take a look at the Dow, maybe as an example. No, not the Dow. Oh, right here, silver. So in the case of silver, both the Friday close as well as the Sunday open. Gee, now I got to find it out here. Sorry, give me a second here. Right here. So here was the. Right here is the March close, and the March close, the close on Friday, is what I'm trying to say, was at 34.82, and the open yesterday was at 34.82 as well. So there you've got the exact same level. Now you can see silver here, which is rallying. That's going to be your key resistance level out there. It's going to be the pivot point. So again, if the market is closed, what I do out here, Pat, is I use either the open. I use both the open, I use the close of the prior session, and then I use the open of the current session out there. So I do hope that helps you. And thanks, as always, for the request out there. Tom G wrote in, and Tom would like to take a look at NVIDIA. He's hoping NVIDIA finds a bottom pretty soon out there, you and plenty of other people. If we take a look at NVIDIA is testing its swing point from back on May the 11th. That swing point generated volume 354 million shares. We're trading for 2 hours now. We've had volume in NVIDIA of 112 million. So we're coming in about 330-ish or so. Maybe it's a little bit light. Maybe it's similar. So far, prices tested and rejected that swing low. And that low out there is 104.77. If it does reject that low on lighter volume, that could be a bottom. On a weekly time frame, you can see the A to B equals CD pattern that I've drawn in here. Price hasn't really attained the full 1-to-1 price projection level. That's at 102.77. Price is, though, testing that swing point on a weekly basis. The weekly chart had 1.6 billion shares, that level. And it's also testing a swing point, NVIDIA that is. It's testing this swing point from all the way back here in August of 2024 out here. That swing point runs the range from 90.69 up to 108.80. And there are 2 billion shares on a weekly basis. Just to give you an example, last week as price was pulling back, it was 1.1 billion shares. So we are moving into that swing point with lighter volume. Doesn't mean that we can't go down and test the low of that swing point. In fact, the monthly chart here is going to close the month below profile support. When was the last time we did that on a monthly basis? Quite frankly, it was quite a while ago. It was all the way back. Last time we closed below the bottom of a profile on a monthly basis was June of 2022 out there. That led to a TD9 count bottom, the TD9 count bottom inside of NVIDIA back in November of 2022. That's when price was down at the 1350 level out there. Steve Rhodes with TFNN. We come back to this break. We're going to take a look at Ford, GM, Beyond, Coinbase, natural gas. Be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. What we've got up on our screen here is the S&P 500, the seasonal chart, provided by our good friends over at SeasonX. We're taking a look at the full 97-year history here of the data that we have. And what we've applied is we've applied the post-election cycle pattern. The red vertical line that you're looking at is where we're at today. What this suggests is that during the presidential cycle, post-presidential cycle that we're in, that bottom typically forms either on April the 7th, so what is that, next Monday out there, or another significant bottom right around April the 27th, 28th out there. Now, let me see if I can do this here. What is this you're doing, Stevie? You're going to try to go to intra-month. Let me see if I can get the S&P, which we can. Let me see. That's for 10 years. Let's pull this back for the 97-year. Well, you know what I can't do? That's the problem. That's right. I can't do this and put in the president. Well, hold on. I could be wrong. Nope, I'm not wrong. I can't put in the presidential cycle. I would have to manually do that. I'm not going to do that for you here and manually. So I'll just simply go back to suggest that what the system is suggesting, historically speaking, seasonally speaking, is that bottoms typically form as we come into basically this week. Tomorrow becomes April 1st, so by the end of this week out there. And what's interesting here, we take a look at the cash indices, and that's what I've got up on my screen. This is for the daily time frame. Dow is strong like bull. So what does that mean when it's strong like bull? That tells us that international capital is flowing right into the Dow right now as we speak out here. The Dow, which had a nice TD9 count top out there, pulled right back to its breakout level of support, 41,412.75, and the buying began. In the case of the S&P 500, it's testing and so far has rejected that swing point that we talked about from back in March 13th out there. But it's also triggered that Rhodes momentum indicator signal, as has the NDX, the Russell 2000, as has the transports, as has the compact, the NASDAQ composite out there. And all of those need bullish reversal candles to confirm bottom patterns out there. And those are really nice bottoms because those typically lead to a slingshot to the move to the upside out there. That's the pattern where you got that ball that you're trying to hold on underneath the pool, and you can hold on it for just so long before it simply takes off. And off you go. And so those are the patterns that are setting up. You take the Russell 2000 at the present time, at 11:33, it shows that it's a bullish hammer candle. But there still is a little bit of a gap to the downside, so I question whether that's really a hammer candle. Does it matter? No. New York Stock Exchange strong like bull. Out here, price pulling back, testing its breakout level support of 19,176. It's also tested and rejected, I believe. It has. At the top of its TD9 count swing point. That's a swing point for March 13th. So New York Stock Exchange chart is looking much stronger than, quite frankly, all of the other charts, with the exception of maybe really the Dow out there. So what's that all about? As I say, I think the market is getting ready to form more of a bottom. I know there's a lot of people in the base camp out there that we're in a bear market. Growl. Stevie's not in that camp at all. Not even close. In fact, I think what the market's setting up for is the next big, huge, gigantic, ginormous buying opportunity. But we'll take things one step at a time. The first step, though, is let's go take a look at Ford Motor Company, see what it is doing out here. Well, that's not it. That was NVIDIA. We've really already covered NVIDIA, so no reason to go back to that. But let's go back to then this chart here. I would think this would be Ford. Yep. So pull up the charts for Ford. And Ford, moved lower today. The whole tariff stuff out there, that's just a sideshow in Stevie's opinion. Everybody's getting caught up into the sideshow. I'm really paying attention to the chart patterns out here. But in the case of Ford, what it's done so far today, Mr. Bill, it's held the bottom of its daily profile Now, it's taken a lot of work to get back inside there, and it's finding resistance right now at that red oscillator and change line. But its daily profile resides, support is at 988, and the top is at 1034 out there. That's the top of its profile. Price is running into this oscillator and change line. If it can close above it, it being right now 995, that would increase the odds of further rally, with that further rally targeting the 1011 area on the daily time frame, the center of that profile. On a weekly basis, we have nothing more than a consolidation with inside his profile. That's between the range of 924 at support and 1045 as resistance. On a monthly time frame, we just have a sideways to lower move. We did make a lower low. We did get to wave number 4. That's letter D in Basil's work out there. And oftentimes once you get there, the market will do something else. But I don't have a bottom signal or anything along those lines. I just have Ford at this moment in time trading with inside its daily profile, its weekly profile, and below its oscillator and change line on the monthly time frame. So that's only going to be a problem if we see price close below, I would say the week from 4 or 5 weeks ago, March the 7th. If price were to close below 906 out there, then Ford would be signaling to you and I that it wants to head lower. Weekly right now testing support. The daily, in essence, doing the same thing, the bottom of its profile. Let's go see how GM is holding up out here. See how GM is faring through all of the noise out here. We take a moment here. You've got GM, which is trading right now into, let me pull this up in here. It is trading below profile support. That's at 47.67. It is trading back into a swing point, Mr. Bill, that's formed back here on March the 4th. Now, that swing point generated volume of almost 21 million shares. So far, in just over 2 hours of trading, we're pulling back with 18 million shares. Interesting. Now, we're pulling back, but we've rejected that swing point. What I mean by that is price is trading above its high, which is 46.42. So if we do close above 46.42, this suggests that price will get back down because it's tested that swing point with volume. It'll get back down and at least test the high of that swing point. Again, the number out there, 46, I think it was 46.42, being that number. On a weekly time frame, the weekly time frame for GM still has a TD9 count, an active TD9 count bottom. Does it? Let me make sure about that. The low, 46.37, the close, 46.29. I take that back. It does not have a TD9 count bottom, and but what it does maybe have is a buy the D point. Let's put in the A to B equals CD pattern here. Oops, that's not it. Let's get the right tool. Let's draw on the A to B line, and then let's just simply go ahead and grab that and move that over to the C point. The next highest high that forms after that. So here, now we haven't really completed an A to B equals CD pattern to the downside. So right now, what GM is doing for its weekly time frame, Mr. Bill, it's testing its bullish structured profile support zone. And that is held over the last 4 weeks out there. Maybe it holds this week as well. The zone is between 46.63 and 47.56. On a monthly basis, price is trading with inside its profile. It has resistance at 52.33 and support at 43.42 out there. So all the tariff stuff out here is causing GM to test profile support level, and I'd say because we're testing that swing point with volume on the daily basis, but we're holding the bottom of its weekly profile out there. Can't get overly bearish with regard to the charts here for General Motors. Let's go take a look at BYOND. I think that's Beyond. Is that Beyond Meat out there? Well, we'll have to do that when we get back from this break. So we're going to look at BYND. We're going to look at Coinbase. We're going to look at natural gas. Of course, I'd love to be able to look at what you would like to look at as well. Steve at TFNN.com. Inside that subject, any please put radio show question, of course, inside our Tiger's Den. Any ping will do.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pros pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Hope everybody had a great weekend out there. What a great weekend of sports it was. A lot of pools being busted, I would think. So looking forward to the Final Four and then the finals out there. That should be great for basketball. My neighbor, he lives 3 doors down, Gary Woodland, almost winning the golf tournament yesterday. What a great comeback story that is after having some brain surgery just about a year and a half ago. Nice to see him playing well, coming into the Masters out here. So just a great story. He is an amazing guy. In any event, we're taking a look at the S&P 500, and what I really want you to be paying attention to here is the bottom panel of my screen, not the top panel. Now, the top panel certainly shows us a shift in energy that the S&P 500 has lost its momentum, but this is also going to be month number 2 to the downside. And if you take a look at that bottom panel, you'll see that bottoms form with the S&P 500 either after a 2-month pullback or a 3-month pullback. So that suggests that we should see a bottom, maybe we see a bottom not until May. That's a possibility. I would say likely that's not the case, and so we're going to pay attention to that presidential seasonal cycle and look for bottoming patterns for the daily time frame to form between now and next Monday. Quite frankly, you've got that nice Rhodes momentum indicator signal on the daily time frame for the S&P 500. But we're looking for there is a bullish reversal candle. We're only in bar number 7 on a weekly basis out there. I wish we were in bar number 8 from a TD9 count standpoint. But so it's a daily time frame, and the monthly chart that says, just let's continue to keep watching this. Let's go to our next request out here from Sat P, who wants to take a look at BYOND. Again, I think it's beyond me, but I could be wrong on that. Here's what I can tell you about BYND, and that is that on a daily basis, price is consolidating with inside its daily profile. Now, price pulled back this morning to the buy zone. It did the same thing on Friday. So the buy zone out here, Sat P, is between 298 and 311. Other than consolidating on a daily basis, that's all that I've really got for it. On a weekly time frame, it's also consolidating with inside its profile. Price on Friday, as well as this morning, pulling back and testing support. The support level from the weekly time frame is 305. You have a sell zone. That means you've got a bunch of sellers that exist between 399 and 418 out there. A bullish reversal candle on a weekly time frame would, in fact, go ahead and confirm a Rhodes Momentum Indicator bottom. And now when we take a look at the monthly time frame chart, it looks like this is getting ready to have probably a 2-month rally. What I mean by that is that you're going to go ahead and complete its TD9 count bottom pattern as we speak for its monthly time frame today. And that would suggest that maybe you could get a rally up towards the 583 level out there. But look, you got to take this one step at a time. You've got a monthly bottom. You don't really have a... Well, let me open up the daily chart. One moment here. So what do we really have going on in this chart? I mean, I think I can find an A to B equals CD pattern, which would have been, so I can find it. What do you mean you can find it, Stevie? Well, if we just simply take a look at this here, here's your, if we, running this chart back for beyond, here's your A to B, and I just simply take that over to the C point out there. It's more than a 1-to-1. Maybe it's 1 to 1.618. But you did get this bullish engulfing candle back here. This is the daily time frame that we're looking at back on March the 4th. So it does have a buy the D point, a daily pattern because of that. If I look at the weekly charts, make sure we didn't do the same type of thing on a weekly basis out here. And on a weekly basis, we did not. So we don't have that bullish reversal candle for the weekly time frame chart. So that's what I've got, Sat. When we take a look at BYOND, you also want to take a look at Coinbase out there. COIN is the ticker symbol here. Now we take a look at Coinbase. It's in bar number 8 on a weekly time frame as price pulls back towards its breakout level at about 160. So this says that you could get a bottom between this week and the next 2 weeks out there, that TD9 count bottom pattern. The daily time frame right now is triggered a wave number 7 G bottom, letter 7. Out there that says the next higher low would confirm that bottom signal. You can see the Rhodes Momentum Indicator signal is also present, needs a bullish reversal candle at day's end. A bit tricky right now with the gap to the downside, plus right now it's showing up as a bullish hammer. And on a monthly time frame, prices pulled back to support at 166.48. So what it looks like to us out here, Sat, is that this is more likely getting ready to form a bottom than anything else out there. But we haven't gotten each of those signals out there. So I would continue watching the daily time frame out here. And that's about all that I've got for you. This is going to be month number 2 to the downside for Coinbase. If I just pull Coinbase back just a tad further, well, the last couple of rallies have been, the last couple of significant bottoms out here have formed after 2-bar moves to the downside. So this is getting ready. Coinbase is getting ready to form a bottom out there. So that I hope that helps you out, Seth. And as always, thanks so much for writing in. Let's do this here. Robert wants to take a look at natural gas, as does Stevie. But let's go populate the daily and the intraday charts out here. Let's just try to get a feel for what the May contract for natural gas is doing out there. It's going to take a moment or two for this to populate. So there was a new profile that formed on Friday. And this morning, price jumped above that, gapped above the top of that profile. And ordinarily, Robert, I would say that is a bullish message out here. But I'm going to open up the daily chart here, just waiting for these intraday charts here to populate. Now it's a good time. We'll open up the daily chart. And so what price has done is it's rallied into that oscillator and change line. We looked at, what was it? I think it was a 2-hour time frame chart for the NQ maybe, or the ES Mini, or the SOX. I don't remember. We were looking at a chart out there, right? I think it was the NQ. And we were saying just how important that was, that for price needed to close above that to tell us that we had a further rally. Well, in this case here, even though natural gas did gap up above the top of its daily profile, I think what it really needs to do in order to get long natural gas, it's got to at least close above that. And that being right now $4.16, 4.167 to be exact out there. Now that's the daily time frame. As price was running into resistance, the question is, were there any intraday topping signals out here? And turns out that the 120-minute time frame chart has a completed, I take that back, it does not. It does not. The 60-minute time frame chart has a confirmed TD9 count top. Although, wait a minute, Steve's got to make sure of that one. $4.21 out there. Where did that close at? $4.21. This was $4.21.9. So the 60-minute time frame chart's got a TD9 count top. The 30-minute Rhodes Momentum Indicator top. The 15-minute is getting ready to form a TD9 count bottom. It will do that in about 10 minutes time from now. That's the 15-minute time frame chart. So I think that's really the key out here with regard to natural gas for its daily time frame out there. Can price take out that green oscillator and change line? And that's currently printed $4.16 out there. Keep an eye on the 15-minute chart. It should rally up towards the $4.14 set mark, maybe $4.15 out there. That's what I see with natural gas. So, Robert, I hope that helps you out. No other requests that I see at this moment in time. So we're going to come back. We're going to do the last segment of the show. I'm going to probably take a look at the ES and the NQ out here for you. Steve Rhodes with TFN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. Remember last week, you and I, we were taking a look at the TD9 count bottom pattern. that was forming inside the VIX index. We were wondering, one, would it work out there? What would it do? What the outcome was? This morning we found out what that outcome was. Prices rallied all the way up into its TD9 count breakdown level. That was at $24.36. Now, it still remains above its 50-day exponential moving average, and therefore, provides sellers with an edge. The same is true with regard to the New York Stock Exchange Advanced Decline Oscillator, which is below its zero threshold level. You can see it printed out at minus 107 as we speak right now. But in the case of the New York Stock Exchange, support is held, and this is tested and rejected its TD9 count bottom out there. If we look at the ES Mini now, let's go switch over into the intraday charts out here. Trading. And we take a look at, so it's the NQ, my apologies. So it's the NQ. I put the NQ on purpose up here because it was the NQ we were talking about for the 120-minute time frame. And as we can see right now, prices trade above that oscillator and change line, something that we have not seen since 2000 hours back on March the 25th. So this is telling us that it is changing its character, or at least it's attempting to do that. Now, this bar here is going to complete in another 4 minutes and 17 seconds out here. So unless price pulls back, this suggests that the NQ is telling us wants to further rally. 19,371, 19,413 is a target for the 2-hour time frame chart. If we look at the 10-minute time frame chart, you're in bar number 7 right now. Again, price still dealing with this TD9 count breakdown resistance area out there. So if price can, if price can clear the breakout level, pull this back, that is at 19,246.75. 19,246.75. Closing above that would be another bullish signal. That's just a bullish signal for the 10-minute time frame. That is. Yeah, it's about all that I've got there. So that turns out to be the end of the show out there. Folks, thanks so much for joining me on Magnificent Monday. Have a great day out there. I'll look forward to seeing you tomorrow on Terrific Tuesday. Take care and be safe out there.